Good evening, guys. Welcome back to the 254 node, where we speak on matters on cryptocurrencies and investment with a difference. 2019 was a pretty dull year in the cryptosphere. We weathered one of the lengthiest bear markets, lost billions of dollars to fraudulent dealings like the infamous Hex and OneCoin debacles. We also witnessed Facebook's interest in becoming a bank through Facebook's Libra project and so forth. 2020 may not offer much in terms of quelling malignant traits such as volatility. It does hold promise in terms of developments which will in essence point out to the future place of blockchain and cryptocurrencies in the world of finance. To remain ahead of the curve, it's best to understand the expected 2020 trends with a bit of research. Here are my 4 predictions on what we can expect this year in crypto moving forward. First, they ignore you, laugh at you, fight you, and then they join you. A better part of 2018 through 2019 was highlighted by governments and institutions downplaying the significant role and impact blockchain technology and cryptocurrencies will have on the economy, with leading figures such as Jamie Dimon, Peter Schiff, Warren Buffett all have been the most outspoken proponents against Bitcoin and other major altcoins. Later on, we saw JP Morgan of Chase Bank take a 360-degree turn by issuing JP Coin to be used for internal settlements. It seems like China may take the lead when it comes to the development of state-backed digital currencies with its own digital yuan. With the current outbreak of the COVID-19 virus, most people are shunning away from using cash and now are opting for paperless transactions. The stage is set for the launch and adoption of state-backed centralized stablecoins. In the US, increasing voices are urging the government to launch its own stablecoin to counter that of China. Christopher Giancarlo, a former chairman to the Commodity Futures Trading Commission, is recently quoted as stating, "An analog currency underserves US dollar users in this digital age." Facebook, on the other hand, faced major hurdles and fierce backlash from governments across the globe. That being said, I expect Libra to be launching soon, since they have the financial resources and expertise needed to do so. Libra's launch will be a good thing for the crypto sphere because it will legitimize the viability and need to evolve into a decentralized form of money. This is somewhat a divisive topic. Pure BTC anarchists call for zero regulations and oversight. To them, and anyone else depending on their varied opinion, are right. Bitcoin is a true pure form of money that does not require a third party in its dealings. On the other hand, we cannot overlook the bad actors. As previously stated, a significant challenge facing cryptocurrencies has to do with fraud. Last year alone, this amounted to nearly $4 billion in investors losing their money. With that in mind, 2020 will be a year of regulations. Most governments are now in a rush to issue out regulatory framework within their borders. Typically, most of them look up to the US for guidance, though Europe, Singapore, and South Korea are blazing the trail in these regards. Any government which lags when it comes to blockchain and cryptocurrency adoption is going to miss out on so much. The losses may be quite significant to their economies that they may not be able to walk away from it. The fight between electric cars like Tesla and ICE car manufacturers such as GM and Ford is a perfect depiction of this scenario. "2020 will be the year when Bitcoin makes the transition from a highly speculative financial instrument to the more favorable version, that is, of the digital gold. Over the years, it has been touted as being digital gold thanks to its innate characteristics, but recently, Bitcoin managed to stand out as being an uncorrelated asset. It has also developed into a more mature market. According to a recent Bloomberg report, and I quote, "Increased futures open interest, declining volatility, and relative outperformance despite the stock market shakeout indicates Bitcoin is maturing from a speculative crypto asset towards a digital version of gold." Similarly, with the forthcoming halving event, the inflation rate is expected to go even lower, and with the unlimited printing of the US dollars by the Fed in hopes of stemming off the effects of the current pandemic on the wider markets, it goes without saying that the US could be faced with an increase in inflation. This will make the general population to run to safe haven assets such as precious metals and now cryptocurrencies. Lastly, one other trend to expect this 2020 moving forward is more institutional interest in other cryptocurrency markets, particularly Bitcoin, thanks to its first movers advantage. This recurring theme has been mentioned since 2019, but momentum is yet to gain speed. As you know, institutional money and adoption takes time. It's not something which happens overnight. One tool which could lead the surge in institutional money flowing into crypto markets is an ETF. Sadly, the SEC has so far to date rejected all applications for a Bitcoin ETF. One example of such an ETF is the Wilshire Phoenix United States Bitcoin and Treasury Investment Trust, which, despite being amended 6 times within 13 months, has still been shut down by the SEC. They did so citing lack of sufficient investor protection and manipulation of the Bitcoin market. But we all know that there is no single market on earth which is not manipulated in one way or another. Ultimately, institutional interest in an ETF and other crypto-related products are certainly going to place pressure on the SEC on the long run to approve an ETF. That aside, we are still witnessing increased institutional interest in cryptocurrency markets. Grayscale Investments, a cryptocurrency venture capital company, recently reported that they hold nearly 2% of all Bitcoins in circulations in its Bitcoin Trust. Grayscale's head of investor relations is quoted as stating, "We saw an 88% increase of nearly $503 million in capital invested into our family of products come from institutional investors this past quarter. With the current fiscal policies being witnessed in the United States and across the globe, more and more institutions are seeking to build highly resilient portfolios, thereby cementing the notion of increased institutional interest in cryptocurrencies this 2020. So that's it for the video, guys. Thank you so very much for taking your time to listen to me or to watch the video from wherever you are. I do appreciate your time. If you found any value in this video, then please consider sharing the video with your friends, with your loved ones, and let's spread the word about cryptocurrencies and the numerous benefits they offer us. Similarly, if you would wish to support the channel, I would recommend and appreciate if you would take your time to leave a comment at the bottom or in the comment section, as well as a like. And if you would like to get more content of a similar nature, then I would highly recommend you consider subscribing to the channel, as I regularly upload videos. Thank you so very much. Have a lovely day, night or evening, and catch you on the next video.